Hey guys, it's Dr. Dollar here with another trade breakdown. Now in this video, I'm going to be teaching you guys exactly how I manage my risk in order to take break-even weeks into very, very profitable weeks. Stay tuned, you guys won't want to miss it. Alright guys, so in this video we're going to be talking about key points for risk management. We're going to be going over closing with no emotion, finding a better entry, losing less and winning big, when price is in profit, you guys are going to see what to do, and when price is in drawdown, you guys are going to see what to do. You guys are pretty much going to learn my whole risk management strategy when it comes to scalping the markets, right? The big thing about risk management, especially with scalpers, is that you guys have to understand that the slightest bit of manipulation in the market can take you out with your 10-20 pip stop losses, right? Recently, I've been having to manage my risk more, but I've took pretty much a break-even week into a very, very profitable week. Why? Because I used great risk management and I let those runners run, right? So when you let the runners run, that's like the extra pudding on the cake. At the end of the day, I make the most of my money after TP1. Why? Because I'm closing a lot of my position at TP1, right? Because we're scalpers. At the end of the day, I only need 10-20 pips to make my money in the market, and then I will be completely happy, right? So in this video, I really want to talk about is pretty much preventing full percent losses, right? When you guys understand how the market moves, you guys can understand that, okay, price does this, we got to do this, right? So this is a very, very important section in your trading strategy. Everybody should have risk management down. Probably one of the easiest things to learn, but it's a lot of psychology to do with it, right? So make sure that you guys are learning psychology and making sure that your mind is right for the market, right? So right over here, we have a beautiful little range over here. We came up from this area over here, tapped right into it, rejected it, right? And now we're getting a sort of like a Fibonacci over here. If you draw it from here to here, you have a Fibonacci play, 3 taps into that 764 area, and now we're impulsing to the downside, right? Now, me personally, I'm a breakout trader. Now, I have multiple strategies that do go into it, but personally, I am a breakout trader, if I'm being honest, right? So right over here, we have a beautiful breakout, right? Now, let's go back in replay mode just to see how this worked out, right? So as you see in the market, we see that we have a level of support over here. Where would I normally sell below? I would probably sell below right over here, sells below right over here. The reason for that is because we understand that market structure is coming down, right? We understand that we're kind of in a downtrend here, and now that price is coming down to the area, we need price to break wicks to then execute our trade, right? So right over here, we see that price came down. And what do we notice? We see right over here, we're getting a candle closure below the zone, right? So that's giving us some nice confirmations. Now, I would most likely execute this position somewhere over here to then keeping stops, 10, 20 pips away or 10 pips away. Now, I usually have 10 pip stop losses because why is price coming back in the range if we're bearish, right? So that's a big thing of why I do cut half, right? Because price is telling me it's not ready to break out yet, and we need it to be ready to break out in order to make money, right? So right over here, you have a beautiful candle close over here. Now we're getting that breakout, right? So I would most likely be in this position here with a 10 pip stop loss. Why? Because stop loss will be back into the range, just because if price doesn't want to come down, price, will stop us out, right? So where would I be looking to close half of my position? Now we got to let some more candles run here. Okay, so now we're getting a bullish candle close at our level of resistance, right? At our level of support. So we were supposed to be breaking out, but now we're coming back, and that's a pretty nice rejection here. So where would I be looking to close half? If we start to break these highs over here, I'll be looking to close half. Reason for that is because I know you guys remember these little things. I do it all the time on my stream just because I'm very, very good at managing my risk, right? Now, if I'm throwing a 0.5%, like a 0.5 risk, then I'm not looking to close half. Why? Because I already managed my trade before I even entered the trade, right? And I'm usually doing that on the more risky setups. Now, right over here, so you close half once we start entering back in this range. You could either close half once this wick is broken, or you can close half right above here. Now, I usually close half over here. The reason for that is because, price is now breaking highs, right? Why is price breaking highs? Now, another thing that you guys have to understand is that when you do close half, it doesn't mean you can't re-enter that position. Now, you can enter that position again with maybe bigger risk the next time, because you have a new confirmation, a more confirmation that price is going to go your way. So right over here, you have a beautiful, boom, stopped out, right? Now we closed half over here, and then we got stopped out. Now that's a win. you guys have to understand that risk management is a win. Understand that when you guys manage your risk, you guys are winning. Why? Because 90% of traders can't do that, right? So what does that mean? That means that price is telling you it's going to go up, but your ego, your mindset is, oh, there's no way it's going to go up, when there's always a chance that price can go out of your favor. So make sure that you guys are really, really understanding that, and understanding that you're not always going to be right. Now, risk management is going to help you on those times when you are wrong. Why? Because now you understand how to manage your risk, right? So right over here, we are completely out of this position, right? We got stopped out. Now, where are we looking to enter our position again? Now, we understand that this was possible fake out over here, correct? So this candle here was a fake out pattern. So now what are you going to do? Now you only lost, let's say 0.7, 0.6%, 0.7%, right? 0.8%. Now, let's say price starts to break these lows again. Now, we understand that this is the fake out zone. So this will be like our range 2, correct? This will be a range 2. Range 2. So if we break out of range 2, that's the real breakout. It's usually what happens, right? So now we would need to wait for this range 2 to start breaking out over here. And then we'll be in this position over here. Same stops, right? So we need a candle to break below. Boom. Now this would be the candle. And then you guys would probably have stops right above here. Why? Because now you have a price that's created a small resistance over here for price and to continue up, correct? So that's what we're looking for. We're looking for small resistances in our breakout zone, right? These wicks are resembling a resistance, right? So now we could possibly hold this trade, and now okay, now you lost 0.8% here, right? But now you just gained, 4% if you held this trade. Do you understand what I mean? Like, you lose less to then win bigger. Why? Because now this is the real confirmation that price is going to continue down, especially with our small stop losses. It can really bite us in the ass, right? So you guys have to understand that any little manipulation in the market can really, really mess you up. Now we're going to go ahead and see if maybe we can show you guys another setup here where we can manage our risk and then maybe re-enter here. Let me look for another setup. Hey guys, make sure to leave a comment and like the video. If you guys really, really like it, please, 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 it means the world to me. I love to hear your feedback down below. I always read every single comment. So make sure you guys are telling me what you guys like and what you guys didn't like. Either or works for me. Thank you guys. Beautiful example right over here. So we understand that price is coming down to this area here, right? Price is coming down to that area of liquidity, as I'd like to call it. Why is it called liquidity? Because price has a lot of wick rejections over here, right? Now we don't know that this happened, so we're gonna go ahead and just replay over here, right? So we see that price came down just to tap into this area, and now what am I thinking? I'm thinking, okay, if price breaks these highs, then we're good for buys, right? But sometimes, the buys don't play out, right? Because right over here would be our buy positions, buys above, and then we'll be looking to manage risk. Like I always manage risk, no matter what. Right there. Okay, so that we're in for our buys right here, right? We'll be in for our buys over here. Stop loss below previous candle's low, about 14 pips, targeting our 1-to-1, correct? So we'll be targeting somewhere up here to this resistance over here, right? Now, understand that this is a choppy area over here, right? So this is already a watch out zone, right? So this is a watch out zone over here. Now, if we can't hit TPs, what are we gonna do? So now we're in profit, right? We're in profit, super nice here. Look, so let's go back over here, right? So right over here, we shot up. How many pips did we shoot up right here? So right here, we shot up 9 pips, right? So what am I doing? Let's go down to a lower time frame here so I can show you what I would have done in this certain situation, which I've done it on YouTube live stream, so nobody can tell me nothing. I do this all the time. So if price shoots up 9 pips, right, and starts coming back down to break even, I'm closing half of my position. Why? Because we saw so much blues that why are we gonna risk seeing so many blues on our account and now price is rejecting our entry on the bigger time frames, right? If I show you on the 30-minute, you're gonna see that price just came up to tap that 8 SMA, right? So now we tried to break out of that SMA and now we're rejecting the SMA. Now we're coming back down to entry, right? Here's where you're gonna close another half of your position. Why are you gonna close another half? Because you have to. That's called risk management. Now think about you would have held this trade, we needed to get 15 pips right up here, right? But we are in a watch out zone, correct? So what are we gonna do? We're gonna wait and see what. So for a full percent stop loss when price is telling us it's not ready to break out the zone? No, you're gonna take your ego out of it and you're gonna learn that this isn't the trade to be in, and you're gonna close half over here. You go to the lower time frames, I'll probably show you exactly where we would probably close another half. Now, I would probably close another half if price starts to break this low. Why? Because then we're breaking market structure on the 5-minute time frame. So market structure is gonna break on the lower time frames before it breaks the higher time frames, right? So understand that, and really don't be afraid to close another half, right? Why are you afraid? Because at the end of the day, we're in a losing position. So now you close another half here, and then just to be safe, I'll probably close another half here. Now you guys have seen me do this live. I've managed my risk almost 4 times before hitting stop loss, all live on YouTube. So it's really how I keep my losses small, and then boom, we only lose 14 pips. We lose how much? We cut 50% here, so we're down to 0.5% risk. Then we cut another 50% here, so now we're down to 25% risk. And now we cut another 50%. So you pretty much lose like 0.3%, 0.4%, which is the key of being profitable. If you guys can keep your losses to 0.4, 0.5, 0.6, 0.7%, now you can win one trade and get 2 losses back. Right? That's ideal for scalpers, especially for scalpers in the market, because you guys really need to understand that price is any little manipulation in price, you're gonna get stopped out. Now, you need a high win rate if you're trying to scalp, correct? So if you guys are swingers, okay, you guys can win 30% of the time and still become profitable, right? If you're catching 1 to 3s every time. Now, for scalpers, we need a high win rate. Right? We need a high win rate because we need to win 80% of the time, or we need to win 50% of the time to be break even, correct? Because if we lose more than 50% of the time, we're going to be down on our account pretty bad, right? Especially with commissions and spreads, which is like another 5% that we need to make. So we need to be in profit. We need to win 55% of our trades to be in profit on our accounts, or break even on our accounts, right? Because of commissions and spreads. So understand that, and really, I hope you guys are really learning and taking notes. This is fucking juicy as fuck, at least in my eyes. Like, this is what made me profitable, understanding the market and understanding that I'm not always going to be right, and really telling myself I'm not always going to be right. But how am I going to keep my losses small and then my winners big, right? Because there's moves. Okay, I'll show you an example, right? Right over here. So right over here is a beautiful example, right? Right over here, we have a beautiful candle closure, right? Are you gonna enter as soon as this wick breaks? No, we'll wait for this wick to break over here. Really break these lows here. You want price to come down, right, with some momentum. So this is telling you in the market we have momentum here, right? So now we're getting a range, a small range. I'll show you on this time frame. Fuck it. Right over here, right? You have a small range. Correct? So now we need this range to break, which is pretty much the same thing that happened over here, right? We created another range. So if we can't break this range to the upside, what's going to happen? We're going to lose, right? So over here, same situation. We created a small range before the breakout. So then you're going to execute your position here, keeping stops right above your range, right? Somewhere over here, 10 pips. And then guess what you're going to get? You're going to get moves that go straight into profit. So why are you risking it when you're in drawdown, right? If the moves that we're looking for are impulsive trades, moves that really go straight into profit. So stop gambling in drawdown. Don't gamble in drawdown. You guys do not want to do that. I promise you that would be the end of your account. Stop gambling in drawdown and wait for the impulsive moves. Wait for these moves that go straight into profit, because it does happen. It does happen. The only trades I manage are the ones that don't go straight to TPs. Now, if they don't go straight to TPs, I'm managing my risk in drawdown and then adding my position back if I'm right overall, right? Because that's how, because nobody knows if you're right or wrong. Now the chart can be telling you you're 80% chance you're going to win, but it's never 100%. There's no guarantees. Understand that and live with that, and then you guys will become better traders. I really hope you guys learned in this video. I appreciate you guys for watching. If you guys haven't hit that like button, hit that sub button as well. You guys will fucking make my day. I'll see you guys in the YouTube live streams tomorrow. Peace.